taken debt largely for this transaction, and we funded this through a debt raising in our entity overseas, and that's the entity that's bought this company in the US. I'm not sure how much of a future cash flow would be the right question. I think we feel that how we funded this deal, the entities, the money from what we make out of this entity in terms of cash flow in the future would be enough to fund, to give us the payback that we want from this deal.
So how much debt have you taken, and how does the debt equity ratio change for Cipla now?
So the debt equity ratio would still be shy of 0.5, right, which is quite a favorable risk profile. But it was always our intention to take debt to the max that we could to finance this acquisition.
See, the big concern that the market had was the Form 483 that Invagen has got. Tell us what's the update there, what is exactly happening there, and what is the situation as of now?
So the Form 483 had observations that we had diligenced, and we kept signaling this through without being able to speak of it. The observations were procedural. We believe that hopefully an EIR should be forthcoming to close out the observations of the Invagen 483 deal.
So in the contract, is there any term stating that, in case there is a warning letter or an import alert, I'm just saying hypothetically, does this deal still go through, or are there provisions that Cipla has in terms of liability for this, or does Hetero will have to pay for it? What exactly are the provisions?
So there are no provisions specific to this, right? In most deals, there are general provisions of good standing for the company. Since we were aware of this, I think we've diligenced it very well. We actually think that hopefully, the closeout from the inspection will happen soon. We've gone through the answers that have been given, and we frankly think that the company is on the path of addressing and getting remediated on this. So there are no. I don't think the observations were material and significant for us to worry about them at all.
You in the press release have said that this deal will be EPS accretive. What are the finances that as of now for Invagen, and how are you seeing this integration happen with Invagen in the US markets?
So EPS accretive because the current business has a fairly favorable EBITDA profile, and then on top of that, we're selling about 32 products in the US. There are 30 more which are pending to be launched. We should be launching about 10 odd in the next financial year, FY17. And as we speak, we're actually trying to launch a product just after closing. So I think we feel good about just the number of products that will be launched. They're almost equal in number to the ones that are launched, and the current revenue profile is 230 million. So it is accretive today. Even if you were to just take today's business, it's accretive, right, for us. And with the future launches coming in, I think we could grow this business in the future.
So will Invagen numbers be part of the consolidated fourth quarter number for Cipla?
Yes, we will report Invagen as part of consolidated numbers, and we had always maintained our guidance not including Invagen for the year. And I think in the next year we'll signal something with both the entities combined.
Okay, so guidance of 20 to 22% revenue growth and 100 to 150 basis margin improvement is not including Invagen. You're saying Cipla as a standalone entity with Metro will be able to do this, and Invagen is not included? Yeah,
we never signaled the guidance with Invagen at the beginning of FY16, so we're not going to come back and say that our guidance had to include this now. We're not going to do that.
What about the product profile? What products does Cipla have? What does Invagen have in the next 4 to 5 months? And, as a combined entity, how will you tackle the US markets?
So there is minimal overlap between the Cipla portfolio and the Invagen portfolio. We think that this business for us in the US, including what we will sell directly and what we will sell through partners, could be in the range of about $400 million. And I think that range, it's not really big, but it's critically sized for us in the US. And our aim is to really grow this significantly so that as Cipla grows, the US becomes almost 25% of our share of revenues. And therefore, looking at what's coming off patent in the US, which is the respiratory franchise and products, as well as the HIV products, as well as the oncology products, I think Cipla is well positioned and advantaged to compete in these areas.
What about give us more clarity on with your partnership with Camber, because Invagen, most of the retail sales comes in from Camber. At a future stage, some of these products will come into Cipla, so there is a high chance that there will be price erosion, there will be loss of market share. So how does this deal work with Camber?
So it's a phased transition. Large part of the sale to the customers will move from Camber to our own front end in the US. And I think most of that transition will happen relatively quick. A little bit of it will take a little longer to close out, depending on customer needs, not so much on integration. So Camber distribution will eventually stop in the US, with majority of it moving out relatively soon, within the next month or so, right? And therefore Cipla by itself will be selling these products in the front end in the US.
What about the deal with Hetero? Because Invagen takes a lot of API from Hetero. They need high tonnage API, while Hetero is a low cost producer for API. So how does the dynamic change here? Are you looking at other suppliers, or are you going to continue with this partnership?
So, by and large, I think the Hetero API sale to Invagen should continue, right? And as part of the agreement, it's contemplated that it would continue. And there are some areas where, obviously, as we go for future products, that the choice would be left to Invagen, whether they would continue with Hetero or not continue with Hetero. Other than just Invagen, Cipla has a very deep relationship with Hetero as well to buy APIs, right? So it's not just a partnership which is founded with the Invagen business. I think the Cipla current business with Hetero is far larger in terms of API than the business between Invagen and Hetero.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.